Question: when will Walgreens stock recover? As you know, the stock price has declined by over 78% in the last 5 years. And more recently, they reported the results for the first quarter, Q1 2025, and there are more things that I like. And that's why the stock price has rebounded, an increase of over 22%. The market liked what Walgreens delivered. And on top of that, you have a market cap of 10 billion and a nice dividend over 8%. So, when you look at their latest results, the first thing, the most important thing, the revenue has increased by 7.5% year over year. An amazing performance for them, especially a retail pharmacy. At its size, this is a good performance. Then, they also announced their guidance. They offered the guidance, adjusted earnings per share for 2025, which is between $1.40 and $1.80. If they deliver around this level, then the market cap can easily go to 12 billion. If they deliver more, then 20 billion. So easily you can have a double only from this guidance. But this is not all. If you also look at their balance sheet here, you can also see that they reduced their debt. And this is quite important. The debt has been reduced from 8 billion to 7.6 billion. So they are making improvements. Step by step, they make improvements. And on top of that, they also announced that they are on track to close 700 stores this year. This is good because they will maintain their profitable stores and they will reduce what's not profitable. So that will be good for the long-term view of this company, Walgreens. Now, you can also look segment by segment, and you can see that all of their segments, US retail pharmacy, the revenue has increased, healthcare has increased, and also international has increased. The only thing that you see as a decline is the operating income for retail pharmacy, US retail pharmacy. You see a decline in this operating income because the retail sales, not pharmacy sales, but retail sales have decreased by 7.2% due to weaker cold flu season. Now, this is not a major problem because as they announced to reduce their stores, improve their profitability, in the long term, this operating income will improve. Then you have to look another announcement, the sale of VillageMD. If you search about this, big news out there, they want to sell this, and you have to ask yourself how much they can get for VillageMD. To find out that, you can look how much they paid for this acquisition. So Walgreens paid more than 5 billion to acquire a controlling stake in this care network in 2021. 5 billion they paid in 2021. If they can sell VillageMD for 5 billion or even more, then that will be a huge plus for Walgreens, especially that the market cap of Walgreens is only 10 billion. And VillageMD, the stake in VillageMD, was worth about 5 billion in 2021 when they paid that price. If they get at least 5 billion, they are well off. So, besides improving profitability, they also get some money from selling their stake in VillageMD. And if you look at the revenue for healthcare here, it's only about 2.1 billion. So VillageMD is part of this segment, healthcare. And as you can see, the operating income is quite low compared to the others, international and the US. So even though they sell this stake in VillageMD and their sales will decrease just a little and also operating income, is not a big loss, especially if they get 5 billion for this deal. If they get 5 billion, that will be quite a lot. They can continue to pay their dividend, reduce their debt, and improve their profitability. So, as you probably know, healthcare, this segment, US healthcare, not only contains Village, MD, but also CareCentric and Shields. And as you can see, the sales for all of them have increased. Village MD by 9%, CareCentric by 16%, and Shields by 30%. Now, it's good that they are selling the lowest growing company, Village MD, based on these increases in their revenue. So that's good. As I said, if they get 5 billion, at least 5 billion, that will be a huge plus for Walgreens. The stock price can continue to grow. Then, another opportunity is Walgreens to be acquired by another company. There was a news out there. Walgreens in talks to be taken private by Sycamore Partners. If this happens, especially at the current market cap of 10 billion, because Walgreens is worth more than 10 billion. If this company is taken private, then whoever wants to buy Walgreens have to pay a premium price. So shareholders can easily double their money. Imagine, if they pay $20 per share or $30, we don't know the price yet, but it will be a premium. If they pay $20 per share, you have a double, easily. If that happens, of course, this is an opportunity, because if you read more about this deal, the CEO didn't say anything in the earnings call about a possible acquisition, takeover of Walgreens. So, unlikely headed for a buyout from a private equity. But you never know. That's why you have to consider also this opportunity. Then, you also have to ask yourself about the dividend. Is the dividend in danger? According to the earnings call, if you listen to it or read it, you can see here, long-term generation of positive cash flow remains a key priority for them in the context of litigation, opioid payments, debt, and their current dividend. So you see the order of priority. Litigation, opioid payments, they might face other payments in the future, their debt, and then the dividend is the last one. Think about this. Then, let's read more. We also continue to evaluate the appropriateness and size of our dividend as part of our capital allocation policy. The size of their dividend. Be aware of this, to evaluate the appropriateness and size of their dividend. This makes me think that the dividend may be reduced from the current level, may be cut by 20% or 50%. If you look at the history, you can see that dividend has been reduced. In 2023, 48 cents to 25 cents. Now, why do I believe that the dividend may be reduced? Might be a problem. Let me show you. You can see that last quarter, they used 260 million to pay the dividend, right? Cash dividends paid. A decrease from the last year, from 400 million to 200 million. Now, if you look at their earnings, a huge decline. So, if the profitability of this business doesn't improve, they have to reduce the dividend. I mean, that's a must. If they want to turn this business around, they have to reduce the dividend, improve their profitability, reduce their debt, and then the dividend. But what's the problem? If they announced a reduction in their dividend, the stock price will decline. So, won't be that attractive. Walgreens won't be that attractive if the dividend is about 4%. You have to be aware of this risk, that the dividend may be reduced. Overall, the business has improved. I like the way the management handles their operation. They continue to close their stores. I hope the unprofitable stores and keep only the profitable ones. They get rid of Village MD. As I said, if they get 5 billion, that will be a huge plus. And if they get acquired, I don't think if this will happen, but you never know. You might get 20 billion or even more than 20 billion for this business. To be conservative, 20 billion. And you have a double. But as I said, in the short term, I mean next quarters, you might see a reduction in the dividend. This might be likely to happen. And at that moment, you have to know that the stock price will decline. Just be aware of this, of the reduction in the dividend may be possible. So that's it for this video. And if you have other questions, please let me know in the comments.